for Travis to hop on, so we'll get started in a little bit.
Yeah, he just hopped on, so
Oh, nice.
We'll wait a bit before.
Hi, Travis. How are you?
Hey, I'm good. How are you?
I'm good. I'm Maria. I'll be the moderator today. I guess we'll wait a couple of minutes to just get started, let people in from the waiting room.
Awesome. Sounds good.
Thanks so much. Okay, so I think we're just going to get started. Just to introduce CORE, we are Columbia Organization for Rising Entrepreneurs, the largest professional student organization at Columbia University, with the goal of educating, inspiring, and launching the next generation of entrepreneurs. Thank you everyone for coming to this event. This is a continuation of our Black Visionaries speaker series, where we highlight Black entrepreneurs disrupting the VC and Fintech scene while uplifting underrepresented communities. This speaker series is hosted by Core Elevate, which is a new initiative committed to creating spaces that uplift marginal communities within Core, Columbia University, West Harlem, and beyond. I'm Maria. I am a founding member of Core Elevate, and I'm here with a couple of other Core Elevate people, as well as Ty, who is one of our members, and he will be moderating questions towards the end. Thank you so much, Travis, for being on this call.
Thank you for having me. Really happy to be here.
Thanks so much. Yeah, so I'm just going to give everyone a quick intro to tell them a little bit about yourself. And it's my pleasure to introduce you as our final speaker for the Black Visionary series. Mr. Travis Holoway is the co-founder and CEO of SoLo Funds. SoLo Funds is a mobile lending exchange that connects lenders and borrowers with the purpose of providing more accessible access to loans of under $1,000. SoLo Funds was created to disseminate the predatory payday lending system. Today, SoLo is one of the fastest growing fintech companies in the country. Prior to founding his company, Travis built his career as a financial service industry as a financial advisor. It was then that he discovered a major disconnect between the wealthy clients that he met daily in comparison with the 78% of Americans that live paycheck to paycheck. He felt that there were many pain points being experienced by individuals in the middle and lower ends of the financial spectrum that were to be addressed. Travis has been quoted in various publications and websites, including Forbes, American Banker, Black Enterprise, and the LA Business Journal. He resides in Los Angeles, California. In his free time, you can find him at brunch, sneaker shopping, or listening to podcasts about business and popular culture, which I relate to all of those. I love brunch and podcasts.
Yeah, it's one of my favorite pastimes. COVID has put a wrench in my brunch plans as of recent, but definitely miss those days. I used to live in New York City, and brunch in New York was like my favorite thing to do. LA brunch is good. It's not the same, but either way, post-COVID, I'm looking forward to getting back to it.
For sure. Do you have any favorite brunch places?
They are now, it changes so much. One of my favorite brunch places in New York was Sons of Essex. This is like a few years ago. It's now shut down, but there was a spot on 7th Avenue called Agave, and it was unlimited tequila. That was interesting on a Saturday morning. But yeah, those are a couple of my favorite. Harry's in Financial District. It's okay. Il Bastardo is pretty wild, but yeah, I could go on for a long time. But there's some pretty good spots.
Yeah, I have to take those recommendations down and see if they have outdoor seating. Hit those up.
Definitely.
For sure. So thank you guys all for coming. What we're gonna do is start kind of jumping into questions, learn more about Travis, your journey, and just talk more about SoLo Funds and your purpose for starting it. So to dive in, I would like if you would walk us through your journey, so to speak. Were there any pivotal moments in your life where you had to make challenging decisions, and how did you get to where you are today?
Yeah, that's a great question. For me, I actually grew up the majority of my family is actually from New York City, but I actually grew up in Cleveland, Ohio. And, it was there that I realized that there's a significant difference between the haves and the have-nots. But more importantly, I actually really understood what it looks like for an economy to evaporate in front of your eyes. So my father worked at General Motors in the auto industry for about 37 years. But Cleveland and Detroit specifically, those two cities kind of went back and forth as the poorest city in the country. And it's largely because the auto industry had transitioned, and the steel industry had transitioned overseas, and it really just left a lot of old empty factories and people who were really making kind of like higher earning positions, especially for the Midwest. But those jobs were lost, and you really start to see like the decline, particularly of suburbs and things like that. More abandoned buildings, more abandoned homes, things like that became kind of normal. So when I went to school, I actually went to the University of Cincinnati, and I chose that school because it was as far away from Cleveland as I could get without going out of state and paying out of state tuition. So I went to University of Cincinnati, and it was kind of there that my eyes were open to a lot of different types of people. Those who came from more affluent backgrounds, those who came from much less affluent backgrounds than I did. And I realized that there was certain trends that I would see from kids who came from more affluent backgrounds, and typically their parents worked in finance, or they were either doctors, attorneys, or they were engineers. And as I was looking at, kind of like that cocktail of different occupations to build my career in, I decided finance. So, after I graduated, I moved to New York, and I started my career in financial services, where I was an advisor for about 7.5, close to 8 years. And when I just was starting off, I worked at this really shady broker dealer that is now defunct, thank God. But I wasn't there for very long. But one of the things that I realized is that early on, I was like basically building a book of business or making calls, cold calls, for more senior people. And lunch was extremely expensive, and I actually had to take a nighttime third shift job just to kind of make ends meet as I was studying for certain licensing exams to work in like the investment banking industry. So that was really interesting, but what it really built is work ethic. I think one of the questions that I ask people in job interviews is how old were you when you started working? Like, what was your first job? And what I realized is that typically people who were hustlers early, I've been working since I was 11 years old. I delivered newspapers, then I was a busboy, then I worked at a shoe store, then I was a valet through college, and like I've consistently kind of been hustling and making ends meet. And what I've seen is that the work ethic of people who start working younger, who are creative younger, figure out ways to make money younger, tend to be better employees. And I always thought that was very interesting. But an example of that work ethic was, hey, I really didn't want to give up this opportunity that I had, fresh coming out of school. It wasn't really paying anything, but I said, all right, I'm just going to work a third shift job. I'm going to work 11 to 7. I'll go home. I'll change clothes. I'll put a suit and tie on, and then I'll go to work. And ultimately, I made it work. I became relatively successful. But, one of the biggest, like, I guess, change agents for me was that because I wore a suit and carried a briefcase every day, both friends and family just assumed that I had money to lend them. And because I was working in New York City and I was working in finance, and, people have these preconceived notions, they would ask me for loans on a regular basis. And I wanted to know, why are people asking me for $50 for gas or $200 for, for the car that just recently broke down? I can't, I don't want to fund all of these loans myself. And I was having this conversation with my co-founder, who was experiencing a very similar thing. He was working at Procter & Gamble as a brand manager, and he happened to be one of the more successful people in his family at a relatively young age, early to mid 20s. And the same thing was happening. You know, you go home for Thanksgiving and your little cousin or your siblings are asking you for money. And the more that we spoke about that, we realized that they're asking us for this money because it's extremely difficult to get access to really small dollar loans, whether it's $50 for gas or $100 to make rent or pay a utility bill. And ultimately, we wanted to change that. And when we realized that the options were so limited and the resources were so limited for these loans under $1,000, we realized that, you know, someone had to do something about it, because the only solution outside of me funding those loans was to send them to a predatory lender, such as a payday lender, that's going to charge them 400% average interest rates, only report those loans to negatively impact credit number to build it. And I just didn't want to send anyone that I knew, loved, or cared about to go take one of those predatory loans. So that's kind of like the story of how, you know, I decided to leave that career and then start this company.
Thank you so much for sharing that. I definitely, I think it's really inspiring how your professional and personal background kind of informed the creation of SoLo Funds. And since it was created with this mission to kind of go against the predatory payday lending system, what are the problems that you're seeing in the system today, and how does SoLo Fund specifically look to tackle on this problem with the company that you built?
Yeah, great question. I think the number one issue is just scarcity. You know, if you do need a small dollar loan, I don't care how long you've been a JP Morgan Chase customer, you cannot walk into any JP Morgan Chase branch and get a loan for $50 or $500. They're just not lending at those levels. So that leaves you, you know, restricted to resources. If you have a credit card, you know, that might be an option for you. But, you know, 70% of millennials use debit cards versus credit cards. And, you know, people just aren't using credit the way that, you know, prior generations have. So that scarcity of resources available is really tough. And in the state of New York, for instance, where I know some of you are, payday loans are actually banned. So it's not even an option to go take one of those predatory loans. I think that's a good thing. But the flip side of that is, it creates issues, is the fact that a lot of people who actually need access to $300 or $200, they might be going without groceries, or they might be going without medicine because they can't afford to get their prescription filled, because those types of loans don't exist. So the number one problem is scarcity. I think the number two problem is really like wage stagnation and wage fluctuation. What we're seeing is, and what we've seen over the last 30 to 40 years, is that, you know, wages have been relatively stagnant, but, you know, incomes, but expenses are not, you know, with inflation, you know, basically, and also with the, you know, the inclusion of the gig economy, you know, people's incomes are like this, like it's like up and down, but their expenses are consistent. So what that does is it creates these pockets where people need access to small dollar capital, and it's just very difficult to get it. So that's essentially where SoLo comes in, is, you know, we're giving people access to create their own terms for loans specifically under $1,000, where we actually empower borrowers to create the terms of their lending activity, which is basically, I need $100. I'm a single mother. I need $100 to pay a utility bill and keep the lights on for my kids. I can pay on the 15th of the month as an appreciation to whoever helps me. I'm willing to pay an extra $5 or return to the lender. And I post that to a marketplace where anyone could fund that particular transaction. And it's going to be much more affordable than it would be if I went out and took a predatory payday loan. But the real secret, I guess, of what we're building, or really where we're putting all of our bets, is the fact that we believe the FICO score is largely broken. We do believe that the majority of the metrics that are used today aren't applicable to the underbanked demographic, especially, you know, millennials, Gen Z, future generations to come, because the behaviors are very different. You know, people aren't buying homes, they're not buying cars, they're not using credit cards the way that the baby boomer generation did, for instance. And because of that, there will be long-term implications when you actually do go out to, you know, purchase larger ticket items, such as you move from New York City to Los Angeles and now you need a vehicle to drive, or you're actually going and looking to purchase your first home. Your FICO score will still be evaluated. And what we need to do is we need to figure out a way to evaluate people now for these small dollar loans, but also create what we call a path to upward financial mobility for them to be evaluated on later. And that's ultimately creating alternative data sources that can be leveraged by these borrowers today to get access to more traditional resources.
Mm, yeah, that's amazing. And I love like the concept of, creating your own terms as a borrower. I'd love for you to speak more on behalf of that and also talk about the people who are the ones that are borrowing and also the ones that are lending these loans to people through the marketplace on SoLo Fund.
Yeah, absolutely. So, when we look at, borrowers creating their own terms, I think that there's a lot of power in that. And what we've seen is that, our borrowers really appreciate it. There's no hard formal application. And it's very different than, the peer-to-peer lenders that existed well before SoLo, the lending clubs, the lending trees, the Prospers of the world that many people have heard of. Those models were very different because at the end of the day, what those companies were doing is that they were taking a pool of capital from a lot of individual people, but then they were commingling that capital. They were holding it on their balance sheet, and then they decided who the eligible borrowers were. So they actually made the decision of, even though I'm using, Maria's money or Jessica's money, they actually decided that, Travis is an eligible borrower or he's not. So we're going to approve or decline his application. That becomes, that becomes more of like that traditional aspect because lending club or lending tree sets the rates. And for some borrowers, they're just unattainable rates, or, they just actually can't even qualify for the capital. And we believe that, the world is much more empathetic than the media allows us to believe, which is part of the reason why we see people give money away every day on GoFundMe. So, early on, I would have, investors say, Travis, I don't think strangers are going to lend other strangers money. But I would say, but people give away millions of dollars every day on GoFundMe just because they connect to the reason why someone needs capital. And that aspect of like the borrower stating why they need money, I've always felt was very important. So when it came to creating the terms, that was an element that we thought was extremely important because there's some lenders who are not really there because they're looking to make a lot of money. They're actually there because this is a way that they can actually give back. They can verify that these people are real people. They're not scamming you. They've satisfied all the anti-money laundering and know your customer requirements to open a bank account. Like these are real people with real needs. And we always felt that was important. But the empowering the borrower to create their own terms, additionally is really important because it eliminates some of the excuses for borrowers, and we're focused on, good repayment rates and low delinquency and low default. But, when a borrower comes back and says, I can't pay, or if that was the case, they actually created those terms. And what we've seen is that borrowers have a very good idea of when they're actually going to be able to repay that next loan. And because our loans are such short duration, you actually have more visibility into what the next 2 to 3 or 4 weeks looks like versus what the next 36 months looks like with a traditional loan with a longer repayment duration. So I think giving that flexibility and that power to the borrower has proven to be for us extremely valuable, as our return rates or delinquency and default rates tend to be 3 times better than traditional averages.
For sure. And reflecting also on this point that the world's much more empathetic than you think, and these people are real people with real problems that they're trying to address during their lives. Is there a story that particularly inspires you of people that you've met during your journey at SoLo Funds and that continues to really empower and inspire the work that you do today?
Yeah, so many. We created this platform where, again, because you can create your own terms, you theoretically can borrow $100 and only repay $100. You don't have to pay anything in addition, either to your lender or to SoLo. And the first time that we started to see loans be funded without any return to the lender is when we realized that we really had something special. Because these borrowers, they were probably not offering anything in addition because they couldn't afford anything extra. But lenders were still giving them the opportunity to get access to that capital, even though they weren't going to make anything on the deal. They just really wanted to feel good. And we see that happen every single day where loans are funded with, no return to the lender. And I think that's extremely special. I think what's also really special for us is that a lot of people have written off this demographic of the underbanked and just called them, non-creditworthy based off of things that they've heard, but not necessarily things that they've actually tried. Have they really truly tried to service this demographic? And if we're a company that's been end market for 2 years, that's proven that we can be 3 times better at underwriting this demographic by allowing people to create their own terms, then, you know, that kind of disproves this thought process that, you know, people in the millennial demographic or people who fall into this underbanked category are extremely risky from a credit perspective. And the real goal here was to prove that payday lenders were mispricing the majority of their borrowers because they were only pricing their product based off of the riskiest possible borrowers. So because I'm going to price it based off of the riskiest possible borrower, that means everyone, even if they're more creditworthy, is still going to pay absorbent rates just because I'm underwriting you based off of, you know, this very much lower quality type of borrower. And we always felt like there should be a distinction between, which is why we created the social credit score, which is really looking at your ability to repay a small dollar loan on a specified date and time. So, you know, that's basically what we use to underwrite. So we're looking at, you know, does Maria actually have the cash flow to repay this loan on the 18th of the month? So we're looking at how frequently Maria gets paid and when do her major bills come out? What are her overall spending habits? Because if she has to make a decision between does she pay back Travis or does she pay her cell phone bill, 9 times out of 10, Travis is going to lose that battle each time. So, you know, we're essentially looking at, you know, that cash flow element because that's really more of a determining factor of your ability to repay and have a more successful experience within the platform.
In a way that also I feel like empowers the people that you're working with because they become more aware of, I guess, setting their limits and their boundaries of like how they can give and receive money. Can you also talk more on the people that are utilizing this platform and specifically like any type of things that they're using it for and how this platform is kind of bridging that gap between the lender and the borrower?
Yeah, absolutely. And to the first thing that you had noted, you know, what SoLo technically does, because it's such a short-term loan, is it actually does build a financial muscle. And the financial muscle that it builds is you don't bite off more than you can chew. And even though this is not a traditional credit card, it technically is, in a sense, a line of revolving credit, because as you pay back a loan, you actually get access to borrow again if you need it. You actually get access to borrow more capital the next time if you show a pattern or history of positive or on-time repayments. But our goal for this is, and the reason why building this type of muscle was important, because if we can leverage your data and give it to XYZ bank, you know, in the future, and they give you your credit card, you know, you should have the muscle built that, all right, I'm not going to swipe more or spend more on credit this month than I can actually repay over this period of time, because all of SoLo's loans are 30 days or less, right? So that basically means that if I take a loan for $300 or $400 or $500, I'm going to pay that back this month. If I do, I can actually borrow again next month if I do need it. But when I truly do get my first credit card, I should have, you know, more healthy, you know, I guess habits built for that. So with that said, the majority of people who are borrowing on the platform are very different than what, you know, the average person would actually think. The majority of our borrowers are located in major cities such as New York, San Francisco, Los Angeles, Houston, Chicago, and it's teachers, it's social workers, it's police officers and firefighters. It's people that you know take the local social worker, the local school teacher. You know, one of the things that I found was really interesting is that many school teachers actually spend their own money to like decorate their classrooms. And get certain supplies. And I found that to just be wild, but it shouldn't be that way. But it's crazy to me that that's the world we're living in. But with that said, many of these school teachers who might live in New York City or Los Angeles, they actually can't absorb any surprise financial shock. So if they're on their way to school and their car breaks down and it's $500 to fix, many of them couldn't absorb that. And I realized that many of them were taking these predatory payday loans to make ends meet on a regular basis. But, you know, you think about the fact that, you know, most teachers are required to go to grad school and get a master's. So there's a significant amount of student loan debt built up. social workers have gone to four-year universities and they have student loans, but they come out and they just don't earn that much money, which is a completely different problem that I don't think I have the solution for yet. But one thing that I think is that, not to get off track, but I do think that certain occupations that have significantly more earning power, their degree should cost more or less, or people who have less earning power, their degree should cost less. But with that said, we're basically penalizing teachers and social workers and, other occupations, even though they went to school, because they literally can't make ends meet if any financial shock occurs. The reasons why people tend to take loans on the platform are for things such as, rent, is usually number one, groceries, utility bills, medical expenses, whether it's prescriptions or it's copays. And lastly, which was usually pretty surprising to me, is vet bills. A lot of people view their pets as extended family members. And a lot of times those needs they come out of the blue and they're completely unexpected. And people are taking loans because they actually need to, pay a vet expense.
Yeah, I absolutely agree with the emergency funds and how some of these people are just not equipped to have because of their buying power. And that is like a tricky situation, particularly now due to COVID-19 and the economic state that we find ourselves in, especially since you're serving primarily underserved communities. How would you say that SoLo's funds direction is going and the mission is going moving forward, given the state of the current financial state?
Yeah. I mean, the company has really exploded post-COVID, which is, I feel very fortunate of, for sure. But I think it's really a testament to what we built and how important, this platform is for so many people, especially who are looking to make ends meet during very difficult times. You look at the number of people who've been waiting on $1,200 checks to come. The first time, it took way too long for them to come, and 33% of people didn't pay rent in April because of it. And I think, right now we're waiting on, or many people are waiting on, kind of this next round to see what's going to happen. And there's so many people still out of work. And it's not even just being out of work. It's also the hours being reduced. If you work in hospitality, if you work in retail and your local mall still isn't, the local Macy's is shut down still, or you haven't been working there very long, so you have really no seniority. So when you look at the schedule, you're not on it for the next 3 weeks. So you're technically employed, but you have no hours. We're seeing, even companies that are giving people payday advances. And there's many companies out there, and I'm not going to say their names, but no free publicity. But they give you access to your paycheck early. But if you're not on the schedule, that's not an option for you. So we're seeing a lot of people who are coming to us now because there's just such a lack of other resources out there. And, most lenders right now are kind of constricting their lending behavior. We're seeing companies completely just stop lending. Lending Tree is, not deploying capital. Lending Club is doing 10% of their annual volume. Cabbage decided that they weren't going to deploy any capital. They were going to transition to facilitating like the SBA PPP loans, but then they were just recently acquired by American Express like last week. But we're seeing a lot of constriction in the market, whereas from other lenders, but we're actually lending more than ever before. We've been essentially growing our lending volume by about 40 to 50% month over month post-COVID, which is phenomenal for our users because that just means more people are getting access to the capital that they really need. And what we're most excited about, and I guess what I'm most relieved about, is the fact that our delinquency rate is actually continuing to trend down. And I think the reason of that is largely because the way that we constructed this platform, where we don't give you a lump sum of capital and then give you 36 months or 24 months or even 12 months to pay it back. These loans are short term. So again, people tend to repay the loan because they may need access to that loan again. And that sense of credit, if you need it, has been a main driver of our reduced delinquency rate, which is awesome, especially during this time.
Yeah, definitely. And I think during the COVID-19 crisis, I've definitely seen a rise in mutual funds and GoFundMe pages. And, some of those, with that rise, there's also just so much that people can give. And while we've seen a lot of generous people giving money to these funds, those people who additionally still need these small scale loans, how are you kind of reaching that population and connecting with those people that need your service?
Yeah, great question. We've seen a significant rise in organic growth, which basically means like just very key word of mouth indicators. So for instance, 60% of our app store downloads as of last month were coming from direct search, which means that people are actually coming to the app store and specifically looking for us. And that is like a very, very much a key word of mouth indicator. But with that said, the way from a customer acquisition, standpoint, the majority of our users do come from Facebook or Instagram. So those have been like our two best channels for marketing, if you will. But we're really excited about our organic growth, which has continued to drive the company thus far as people are having more and more positive experiences.
That's so awesome. That's great to hear.
Yeah.
And with the growth of SoLo funds, particularly now, and seeing this rise of people using the platform, where do you see SoLo funds in 5 to 10 years?
Yeah, so ultimately, I believe that SoLo is a data company. We're kind of packaged as this peer-to-peer lender or this lending exchange, but the ultimate goal for us is again to disprove this myth of people who fall in certain age demographics, people who come from certain communities, inner city communities, rural communities. One of the biggest realizations for me, as I started this company a few years ago, is that, I used to have this perception that, inner city communities were so different than rural communities. And I think politics has tried to, paint the picture or the narrative that that's the case when you look at red versus blue. But the reality is the pain points that exist in rural communities that we've never heard of, and the South Bronx, there's very similar. The population size and density is really the only difference, but they're both food deserts. The Mexican night is Taco Bell. They're from a financial perspective, the top 4 banks aren't in those communities for the most part. And they experience a lot of these issues of being financial and food deserts. But the main thing here is we wanted to create like this sense of like understanding for both sides, and meeting those needs of these individuals who don't have a lot of resources. And if we could start to show that they are better borrowers, if we could show that they are, more trustworthy than a lot of people believe, and we can build these very specific financial habits, we could actually create these opportunities for them to get access to more traditional financial services, whether it's credit cards, whether it's just, different accounts, start having people plan for retirement savings and college savings, things like that. That's another element of SoLo, which is, the financial literacy piece. That we don't get taught in schools. People learn how to manage their finances today, largely by making mistakes, which are unfortunately some of the most expensive mistakes that you can make, over the course of your life. And really what we want to do is be able to leverage this data to give people more access. So I would say that, 5 years from now, SoLo might still be facilitating loans, but really it's the data and this ladder to more traditional resources that we really want to be providing.
Yeah, definitely, for sure. And being on a Zoom call with a lot of college students, and me particularly being an FGLI student, I'd love to know any financial tips that you have for college students to navigate this, like either financial lending system or to have more financial literacy in our lives.
Totally. Number one rule is never take a payday loan. They're extremely predatory. It'll take you a very long time to dig yourself out of that trap. For those of you who may not have ever seen it, and want like a pretty clear example, there is a documentary series on Netflix called Dirty Money. And episode 2 of season 1 is called Payday. And if you watch that, it won't take you very long. I think it's like an hour or something like that. But if you watch that, you'll have a very clear depiction of how predatory that industry really is. So never take a payday loan. Like focus on building savings. And I know it's like really hard, but one of the ways that I kind of like had taught myself and what I tell other people to do is pay yourself first. There's many adults who basically they go to work every day, they get their paycheck, they start paying all their bills, they spend their money or do whatever they had planned for the month. And then if there's anything left over, then they'll save that. That's completely backwards. As soon as you get your money, you should actually have, you should be paying yourself first. So obviously you have your bills, but your savings should actually be a bill. And once you pay that and you pay your other bills, you can spend whatever remains with reckless abandon because you know that you've already, taken care of your responsibilities and you've actually saved. But building, some type of emergency savings plan, or call it pot, whether it's 3 months or 6 months of expenses is like really, really, really important. And the earlier you do that and the more you make that, a habit, you'll continue that, through your life. So I think that's really important. Having a healthy relationship with credit cards. If you don't have credit cards and your parents might have one, potentially becoming an authorized user on their account, so that you can start to build credit. What the benefit of that is you're a lot of times judged based off of how long your credit account has been opened. And, if you're able to become an authorized user on one of those accounts that might be 15, 20, even longer or even older, that's actually a significant benefit to yourself. So I would say, if you can become an authorized user, do that. I would say that, those are a couple of examples that I would recommend.
Yeah, that was so helpful. I definitely am going to be looking into the credit card. I've been meaning to get on that for a minute now. So helpful to hear this information.
Awesome.
I think we're going to turn it over to questions from the Zoom group chat. So Ty, do you want to introduce yourself and also kind of open up the floor?
Yeah, of course. Thank you so much for an amazing discussion, Travis. That was really insightful, particularly to hear just the service you're doing for the underbanked and marginalized communities. It's amazing to hear this. And Maria, obviously, it was an amazing time hearing you facilitate this conversation. I'm Ty, rising junior at Columbia, studying theology and business management. And we have a couple of questions here. First, I'll start with Edna. Could you go ahead and either unmute yourself or unmute yourself and your video, whichever one you're more comfortable with, and you can ask your question.
Yeah, sure. So my question is about credit scores and whether or not you think that it's possible to remove racial bias from them, whether that be through legislation or more transparent algorithms. Because at least from what you shared with us today, which is so insightful, even if the credit score is fair, it seems like the life experiences that go into calculating it aren't. So I'd love to hear your thoughts on that.
Yeah, that's a great question. I'm saying they, like who is they? A lot of people in legislation or I guess in government have said that redlining doesn't exist anymore. And for those who don't really know what redlining is, it's that they don't ask you for your race or ethnicity, but anymore, but they used to, and they would basically just say, hey, if this is an African-American, or if this is an African-American community, so call it the South Bronx, everything is being gentrified right now, but South Bronx is largely still majority minority. If someone is in this area, then you can basically, even without, asking them their race, you can basically say, hey, there's a higher likelihood that they are, and that they're less creditworthy, for instance. They say that doesn't exist, but I don't know. I just have sneaky suspicions that it does. But the reality is that I think a lot of alternative data is going to be required to really disintermediate that old system. I guess that would be my answer. And with millennial populations using 70% debit versus credit, we do need to look at other factors to basically say this person is creditworthy. And I think that there are ways, and there are other data points that could be leveraged. I think cash flow is really important, but the way that FICO looks at, scoring you is really, can you make multiple payments over a long duration of time? And if you don't have a history that says that you can do that, especially if you're younger or if you're coming from the underbanked population, they're just going to automatically assume that you cannot, which is why we're looking at your cash flow of, could you make a payment on a specified date and time? But I think, it's companies like SoLo, and I'm not saying SoLo alone by itself, and some of the data that we can provide, and just show that, ultimately, like, the goal is to be able to say, hey, Edna has taken, 5 loans over the course of this past year, give her her first credit card, but not only give her her first credit card, she should have a larger limit, and she should also have a lower interest rate, because she's shown a pattern that she can actually take loans responsibly, pay them back over time. And that's like one, data source. But I think that there's other behavioral, pieces of data. I think that there's I think that there has to be some level of like social equity that people can build. And if you have strong relationships and strong networks, I think that that should be kind of telling on your ability to repay. But I do think it's going to be tough sledding, because the industry or the traditional credit markets have been, the same for so long. And until, I would also say this, I do think things are starting to shift. And the reason why I think things are starting to shift is because they have to. And it's because people aren't buying homes and using credit cards and buying cars the way that they did before. So eventually banks and creditors will phase themselves out if they only underwrite you based off of the way they've done things for the last 50 years. So I do think that that's going to change, but from a racial or ethnicity perspective, I think that we're just going to have to rely on some of the behavioral data that can be provided from alternative resources. But I don't really have like the strong answer, but that's what I think as of right now.
No, that was really helpful. Thank you.
Mm-hmm. Great. Thank you so much for that, Edna, and an amazing answer, Travis. Nicholas, can you go ahead and answer or ask your question?
Yeah, so I wanted to know if any of your future projects, are you getting into like blockchain or smart contracts?
So, I would say it's not on our product roadmap right now. I do think that people are finding more creative ways and more like applicable ways to really leverage blockchain. And I think that will most likely come into play when we go international. I think that there's a lot of ways that, that becomes more applicable as we go across border. Right now, we're just based in the States. But I do think that there is a significant benefit to leveraging that technology when we go abroad.
Thank you.
Yep.
Hans, you can go ahead and ask your question. If he's not there, I'll just ask it for him. So he asks, will your business model go international? So thinking of places like the Caribbean or certain countries in Africa or just other kind of places with the Black diaspora.
Yeah, it's definitely on the roadmap. When we originally, my co-founder and I originally started this idea, we were just thinking about, we should be able to send, a $20 loan to a farmer in Nigeria. That should be a thing. And we do believe that, there's like a decent amount of companies who are actually focused on providing more affordable loans in places, abroad. And I think there's a lot of opportunities, especially on the continent of Africa. But, I think there's a lot of opportunities, particularly, whether it's, Caribbean, places like Jamaica or even, Haiti, Dominican Republic, et cetera. I think there's a lot of opportunities there, as well as South America. So eventually we will go international. We most recently partnered with Visa, and being able to leverage their licenses and network will allow us the ability to do so much more rapidly and much more cost efficiently. So we will be fully launching that January of next year, our relationship will be kind of like fully set in stone. So when that gets done, I would say we'll start looking abroad. But we have filed for IP in numerous countries globally.
So proud of you, bro.
Thank you. Appreciate it.
Lord, you can go ahead with your question.
Yeah, so I'm just a bit curious as to like the technology behind the SoLo Funds platform and basically like how you plan to make some of that large scale data more accessible to people who might not be exposed to certain technologies from these underserved communities.
Yeah, I'm sorry, the last part of that was how do we make technology more available?
Yeah, like the technology you're using in your platform more accessible.
Yeah. So we're completely mobile. And I guess like the main core element of SoLo is really the underwriting model, which is looking at someone's ability to repay. But we are mobile, we're on iOS, and the core technology of our underwriting algorithm, I guess, is kind of like trade secret, but the platform in general, there's a lot of room for us to grow. We're not even on Android, which a lot of people would say the majority of people who would need access to this type of capital would be on an Android device. We actually did originally launch on Android. We launched both platforms at the same time. And what we saw over the first, like 8 to 10 months was that only 12% of our users were on Android. One of the examples that I always thought was really interesting, or I guess how I could help it become more relatable, is that phones are very much status symbols. And even though you might not really have money for the new iPhone, a lot of people are using old versions of the iPhone just to say that they have an iPhone. And that's what we would see, is that we had a lot of users who would be on iOS devices, but it would be really old iOS devices. And we decided to stop supporting Android specifically because we just didn't really have like the team or the infrastructure to really support it in the right way. So we will launch one post our Series A, which will be here over the next couple of months. But that's one of the ways that I think we can make the technology more widely available. But ultimately, we also want to leverage our technology for the underwriting model and make that available to more traditional institutions to where they can make more informed credit decisions using our technology and credit model.
Thank you.
Definitely.
Okay, Catherine, you can go ahead and ask your question.
Hi, sorry, I may have missed this because I joined a few minutes late, but I'm curious about if SoLo is considered a money transmitter, or like what kind of regulatory scheme you're subject to, like who's your primary regulator?
Yeah, so technically it's the CFPB, but SoLo is not considered a money transmitter or a bank or a lending company or a loan broker. We are very creatively designed to navigate the different regulatory issues that most fintechs face. But because we truly are a marketplace. So we are deemed as a marketplace because there are no imposed finance charges on the platform for any users. And we're not a party in the transaction. This is Tom lending directly to Mike. And they are facilitated on the platform, but we actually don't move the money ourselves. And we actually leverage a bank on the back end. So long story short, there are numerous ways that we've kind of navigated the regulatory scope, which has allowed us to have national exposure versus being regulated on a state-by-state and launched on a state-by-state basis. But we're technically a marketplace. SoLo is basically Airbnb for loans, where we're facilitating the meeting of individuals together. But just as Airbnb, you have a host that has an empty dwelling, they're posting that for a potential tenant, and they actually create their own terms together.
Okay, do you take a slice off of that? Is that what, like a fee?
Yeah, so it's not technically imposed. So there is a optional donation because, again, the borrower creates all of their terms. So there's no hard transaction fee that's imposed at the origination of a loan. SoLo gets paid a number of ways. The donation is one. And what's also very unique is that the majority of people actually do donate to the platform as well as tip the lender. But again, it's not imposed. We also do make money from an insurance feature that we recently released about 4 months ago, where the lender can actually pay a fee to ensure or protect their loan rather against the inherent default risk that exists in any type of peer-to-peer lending platform. So those are some of the ways that we get paid. But yeah, technically we're just a marketplace.
Great, thank you.
Hawa, you can go ahead and ask your question. Oh, so sorry. She indicated she wanted me to ask it for her.
Okay.
So she asked, as a college student, what are the skill sets needed if we were considering working with SoLo? Would you consider things like more of a finance background, technology background, engineering, really anything there?
It's really all of the above. Our team is majority, I would say it's about half engineers and half operators. So back end, front end engineering. So obviously front end, like the mobile aspect, back end engineers. Our data team is going to continue to grow and become more and more robust. The other operators, we're going to be looking for financial analysts in the future, eventually portfolio managers as we start to release certain features where you can deploy larger sums of capital with the click of one button. We call that like batch lending. So there will be a number of positions that become available. If you go on SoLo's website, there's a careers section. I think right now there's a VP of engineering role, which is like the only role that we have up right now. But if you check back over the next 2 to 3 months, there will continue to be a lot more action there, especially post Series A.
And Jess, go ahead.
Sorry, there's a lot of background noise. My mom's cooking. But basically, did you ever think you would be an entrepreneur?
I did, but I didn't think it would be this. I'm like a big sneakerhead. I really thought that I probably would have been like the founder of StockX or GOAT or something like that. I didn't really see this coming, but it really, really stemmed from that personal pain point. And I figured if, no one else is doing it, and it feels like the ones who have tried didn't really understand the market, I'm going to give my go ahead at this. But I'm a little bit salty that I didn't create StockX or GOAT.
Hans, you can go ahead and ask your question.
Let's see if I get this unmute right. I'm wondering, is there a way we can invest in your company through a crowdfunding platform like Start Engine or Republic? And where can I get a T-shirt?
Send me an email, Travis. I've never got the T-shirt request before. If you send me an email, and actually I don't really mind giving my email out because what I realize is that most people don't email you anyway. Even after, and that's one piece of advice for you all, especially as like you kind of conclude your studies and things like that. If you like network with people and say, hey, I'm going to email you, I think you should actually do it. People actually give you their information because they're willing to talk. But I just don't have any hesitation to do it because I can give it out to a room full of 100 people and maybe one will actually send something. But if you send me a note, I'll actually make sure you get a T-shirt, man. It's Travis, Travis, at SoLoFunds, SoLoFunds.com. So Travis at SoLoFunds.com. We've never done a crowdfunding round. We've been fortunate to not have to. But if you send me an email, we can talk about potential opportunities, for sure.
And then lastly, for Tinashe, she asks, has your startup been through the fundraising process yet? And if so, how was your experience working with VCs and investors?
Yeah, so we raised a relatively healthy seed round, about $7 million. Seed, we're in the process of raising a Series A right now. I would say that, fundraising for any, Black founder is really, really tough. I think we're held at a standard to where you have to be, not only twice as good, but like 5 times better. It seems like the yardstick continues to get extended as you start to reach certain milestones. But I don't look at that as a handicap or an excuse. I actually think it's a competitive advantage. What I've seen for myself and others is that we have, we're about to raise a Series A, but within a few months we'll actually be profitable, which gives us a lot more leverage to go raise that Series A, because I think if I didn't look like this, I think maybe unfortunately, if I didn't have this, melanin in my skin, I probably would have raised a Series A much faster with much less traction. But the silver lining of that is I have a much healthier business going into Series A with a lot more leverage, and we'll have a much healthier valuation. But with that said, I can't give you the woe is me story of I haven't been able to raise, traditional venture capital, because I have. I would just say that, even though it's extremely difficult, what I have found is that the ones who usually are supposed to get it done, they actually do get it done. And they just figure out a way to stay in the game long enough to make it happen. But when I look at the other Black founders who I do know, and the one thing that you'll find out working in this industry is that everybody, especially the ones who have raised considerable capital. We're all friends. We're all on group chats. We all see each other. They've gotten to certain milestones. It's taken them considerably longer. They should have been funded earlier. They should have gotten more money when they got it. But the reality is that they stayed in the game long enough to figure it out. And that's kind of my game I will live to fight another day. And fortunately, we've been capitalized to be able to do that.
And then lastly, before we wrap up, I know Frank, as the mayor of the city of Elyria, if that's how you pronounce it, please correct me if I'm wrong.
Elyria, Ohio, yeah. Frank is on here?
Yes, sir. I just want to give a shout out. Much love to you, brother. I'm so proud of you. The city's proud of you. I'm just listening to you talk. my heart is full, and the blessings to you so much, and just keep it up, man. And anything we can do back here at the city, let me know.
Man, I'm so proud of you, man. So that's crazy. So Frank and I actually went to school together. We were like arch nemesis when we used to play basketball and all of that together. And he's now the mayor of the city that I grew up in, which is so dope. Super young mayor, which is super dope in itself, man. But next time I'm home, I did drop my email. Let's make sure we connect. Ironically enough, my father told me he thinks we're cousins too. So it's a crazy small world, but it's nuts. But I haven't seen you in at least 15 years.
We'll connect for sure. Blessings to you.
Definitely. All right, I'll talk to you soon.
Wow, this panel is fostering brotherhood and relationships. I love it. But yeah, I'll pass it off to Maria, but thank you all so much for your questions. It was really insightful, especially this last sentimental piece and seeing just the growth that you've had from your very humble beginnings. But Maria, go ahead and close it out.
Yeah, thank you again so much for coming. Thank you, Travis, for sharing your story and your experience creating SoLo funds. This is an amazing organization, a company that's going to be growing in the next couple of years, and we wish you the best from here at Core. Please keep in touch, and you guys all have Travis's email. Feel free to reach out. Thank you again, and we appreciated all the questions.
I appreciate it. Have a good day. Good luck to you all.
Thank you. Give us life, man. Thank you, man.
All right, bye-bye.
One more thing before we close out, just wanted to remind everyone, if you want access to the recording that we have with SoLo Funds, Harlem Capital, and Mochify, please visit our YouTube. They're an hour long each one, and you have lots of insightful advice from everyone.
Awesome. Thanks again.
Awesome. Thank you so much.